Guys, good morning. August 22nd, 2019, Thursday. Still calculating the probability of the tech crash. Actually got some developments in the cloud sector. We're going to show you that points to a further drop in the technology stocks from here. So what we've discussed yesterday about the tech crash, all the multiple charts, is actually in addition to that, we got a few other reasons why that actually is going to materialize. Overall, the conditions are such that I've been looking a little bit more into, and the market is pricing in half a point cut. That's why things are bullish. That's why VIX have been kind of dropping just under that 16 level. But overall, we can get completely knocked out tomorrow as far as the bulls part of the equation and just have a very nice drop. Because what if the Fed does not deliver not just a point and a quarter percentage cut, but it may not deliver any cut at all, or any indication of any aggressive cutting. So the market's reaction may not be as favorable as everybody thinks it could be tomorrow. So despite of these cup and handles and all that stuff, things are looking actually very bearish from all the observations that we're making going into tomorrow. So some of the conditions for today, yes, the stocks are up pre-market, but on very low volume. Earlier I was looking at Amazon was only up on like 8,000 shares. Miserable $5-6. It was up on only 8,000 shares. So that typically tells us, hey, there's going to be a reversal here. 8th black candle on Apple. Yesterday we pointed out 7 black candles. Guess what? Another black candle takes place on Apple. And this is just absolutely freaking amazing. When signs like this happen, we should not ignore them, guys. So stay short Apple. Expect overshoot to take place on low volume to 29.46. There is a probability that we're not saying we'll get to 29.46 exact, but last night, right after the market closed, it shot up right to 29.39. So it's reasonable to assume it's going to retest that level. So 29.39 is probably your ideal area on the put side going into tomorrow. Now be careful with going into tomorrow. We're projecting a move 11 type situation tomorrow where initially the market's going to drop, then move higher, and then it's going to drop. So don't just be sitting there, collect the gains on the initial drop, then reestablish your put positions when the market bounces. So it's going to be a very interesting but very profitable day tomorrow, guys. So some of the cool trades we got going on today. SPLK probably is my favorite. SPLK puts, W puts, BYND puts, SRPT puts, and Tesla puts. Yes, guys, Tesla's got a rumor going on that they're selling the company to a German automaker. And, you know, anytime you had any kind of rumors that Tesla is going to sell itself to somebody, of course you're going to get a stupid spike in the stock, but it never materializes. Who would be in the right state of mind to buy Tesla when it's got all this debt going on? It's never been, company having so much issues and so much outstanding debt. It just got hit with a lawsuit from Walmart. Who the hell in the right state of mind would be willing to buy Tesla when it's got all these issues? Look, it's not going to happen. Nobody's going to buy the damn thing. So the fact that it's up today pre-market actually on a bounce creates a really nice opportunity to short this beautiful opportunity on the bounce, guys. So these are the shorts of days. You can see I started coding these guys. So if it's in red, that means buy puts on a bounce. If it's in green, means buy calls on a dip. As you can see, we don't have any buy calls on the dip today, so they're all red. Just buy puts on the bounce. So market continues to struggle pre-market with 29.31, and this is a characteristic of a top. So top one is pointed out yesterday, 29.39 level. Top two, 29.33, 29.34. All of this stuff happens pre-market, but the fact that the overshoot did take place right after the market closed yesterday, within 15 minutes after the close, tells us that, look, target this 29.39, 29.40 with a very low probability of shooting maybe to 29.46. But overall, we want to use this because ultimately this is the higher part of the trading tunnel. What we want to do, guys, basics of trading 101, you want to use the top trading end of the tunnel to actually short the stocks. When they drop, you want to collect the gains. So it's basic stuff here. So focus on shorting while a lot of people are going to be getting bullish here in the expectation of some favorable news from tomorrow. Now, generally speaking, if you look at the history of the Wyoming Hill announcements, they don't really move the market, they don't shake the market. So the market is expecting something good, but the probability they are going to be disappointed. The market typically does not react to things that are already priced in. So one day away from the drop, there's a bigger picture of why this is a multi-top formation. 1, 2, 3, 4, 5, 6, 7. And it's about 7 instances of us hitting this 29.31 level and failing to break above. If you take further look, this is a 5-day chart. You investigate the previous 10 days, we had similar formations. So this level of 29.31 still remains to be the level. Yesterday, we were showing you this chart pointing 7 bearish reversal candles. The importance of all of those candles, and there's clearly some more, right? I got some traders told me, hey, Leonardo, you missed some reversal candles. There was one right over here and another one over here. Like the reason I picked these 7 candles, guys, because they have one thing that in common is they all take place around this level, 215, 220 level. So your observation is correct, guys. For those of you that pointed out, no, we have more bearish reversal candles here on this chart. You're absolutely right. But we want to focus on this level because we're trying to identify these levels. Hold on, this is where all the failures in Apple actually take place. And guess what? Surprise, surprise, we get another black candle. Now, this one is not as strong in its reversal formation, but nonetheless, black tells us that a stock goes higher. Institutions are selling it, so keep that in mind. We're possibly going to get another one of those today. Why would we get another black candle or red candle on Apple today? It was because we're expecting a high probability of move 6, meaning the market initially goes higher, but then towards the end of the day, especially between 2 and 4, expect the market sell-off type 6 behavior, and therefore it would initial pop would result into a later day sell-off, which creates these red or black candle formations with the tail sticking out at the top. Now, here's the trade of the day, guys. Splunk, 125, 120 puts on there. Any bounce, ideally, we're hoping this to bounce to 125, 126. Why would you say this, Leonardo? Why would this thing bounce to that level? Hey, guys, it's very easy for those of you who want to review the trade. Actually, exactly, it was, I think, May 22nd, right? So last time Splunk reported earnings, that was a video where I showed this trade live, where it was trading about 125 level, and we're buying the same trade, guys. That's amazing. Within 90 days, the levels are the same in the stock. And I was actually doing same identical thing. It was doing this pop and drop type scenario. Okay, so bottom line, this is the level, exact level where it popped to last time, 125, 126, 127, before actually selling off all the way to 115, guys. Over the course of 2 days, the stock drops to 115. That particular day, after announcing earnings, it did drop to 119. So kind of target, if you're getting in at 125, 126, target 119 as your first level, 115 is your second level. Now, today, it could actually hit below 115. Why? Because it's got some extra wins. It announced this acquisition, and when a company announces an acquisition of another company, it's actually overall a negative, not a negative long-term for the company, because clearly that's a positive because the company's trying to grow, but it's a negative as far as the immediate price action on the share price of this company. So it's got this huge reversal going on for it. Overall, we're expecting like a beautiful move to in this thing and continue the drop. Now, the recommendation is, what if it doesn't bounce to 125, 126? For that reason, buy some puts right at the open, guys, and collect the gains about 115 level. Splunk on different time frames you got going into this head and shoulder formation. The importance of this is, look, CRM is going to report earnings tonight, and basically just focus on this chart. We expect CRM to do exactly this, initial pop, then drop. That's going to take attention of a lot of people, and it's going to take the cloud sector basically lower. If you're looking at this, look, I just showed you a chart, right? The S&P chart on the 5-day where we reported, hey, this is a top, this is a top, this is a top formation, 1, 2, 3, 4 tops on Splunk on weekly, basically gets you a pop and drop scenario after hours. Keep this in mind, use this as a study case, print it out, the chart of S&P on 5-day and Splunk on this daily chart, and it should make a lot of sense to you guys. So CRM reports earnings tonight. Lots of bearish stuff going on, but again, we expect initial pop and drop, so don't be shorting this stock going into the earnings report, because initially, ideally, we want CRM to open higher, then we want to short it, and that's going to be your higher probability not just trade, but much higher percentage return trade, because you don't want to overpay for the premium for the options today. Now, yesterday we made an observation. Okay, yeah, Target's going higher, Lowe's going higher, Home Depot's going higher, fine. But what we are saying is tomorrow they are going to drop. We pointed out this chart of Walmart, which kind of the leading stock in this group of retail stocks. So we said, hey, look, yeah, it goes high for 3 days, but then it's going to drop. Now, interestingly, while these other stocks were going higher yesterday, okay, look what Walmart did again. Damn! Woo, this does not happen very often. Look at this, 2 identical red candles back to back after this huge move higher. Whew, this is what the retail sector is about to get hit with. So don't pay attention to how these stocks are rocketing higher. They are all about to do this right here. Walmart is a good leading indicator of what's going to take place. Now, consider another trade on W. W got upgraded by one goofy analyst this morning. The stock is super bearish. There's nothing to like about it. But the upgrade caused the stock to move higher to about 122 level. On a bounce, we want to short this. So if it opens at 122, 123, we want to buy puts right there. And then we'll collect gains about 117, 118 level, because the bounce is on such a small volume. I think we're going to get some sellers coming in. Yesterday was a move 7 on August 21st, guys. This is how it looks. Basically, we get up higher. Pull back, they buy the dip. Pull back, they buy the dip. Move the market to this 29.32 level by the close. Okay, Magic 29.31 in action again. Okay, 2-day sequence 11.7, guys. Very interesting. Just a day ago, we had 7.11. Now we got 11.7. So the fight between the bulls and bears continues. Here's your 11 pyramid. Here's your 7 by the dip move. Okay, 5-day sequence 7.1, 7.11.7. Ooh, looks very greenly on ARDA. Why would you expect the market to drop? Because this sequence, as pointed out yesterday, guys, we're 1 day away from the drop. Okay, we've shown you this, right? This is the multi-top formation right here. When you get a overall green-looking sequence like this, be careful, because all of these moves, they happen around the same level of 29.31. 29.31, 29.31, we're seeing signs of exhaustion. Move 6 to 11 is exactly what we're expecting today. So either expect the market to reverse right at the open or towards the end of the day. Basically, all of these, they're bearish reversal moves when the markets are going higher, and that's what we're expecting today. Now, important moment is pointed out yesterday. We're expecting on August 21st either move 1 or 7. So we got a 7. So including the sequence 7, 11, 7. Today we're expecting a 6, tomorrow an 11, which is up for a nice drop. 3 on Monday, guys. So we're definitely on the right track so far. We got the next move in the sequence correct. We're going to be paying very close attention, but a variation of any one of them, even though it says a 6 here, so if we get an 11 or a 6 or a 2, would be all very much in favor, setting us up for overall finish lower by tomorrow's close and a huge drop on a Monday. Okay, so VIX with that is hitting the lower part of the trading tunnel again and again, but it's kind of refusing to surrender this 16, despite of the fact that it did dip a couple of times, like 15.5, 15.7. So expect VIX to initially trade around there, but ultimately VIX will move higher from this level by tomorrow and have a nice huge spike in the VIX, especially Monday. So VIX contracts, as you know, they expire on Tuesday, even though when you go to DMRA trade, it says Wednesday. You got to sell them by Tuesday, so buy next week's VIX calls. Should be a pretty easy trade. So now, as far as the size of the position, let's address this real quick. Wait to put on big positions until tomorrow in the event of a move 11, because in the 11th pyramid move, that's what you want to short. So short the bounce tomorrow with bigger size position. Your contracts are going to be significantly cheaper, so that's your ultimate trade. Pay attention to Apple CRM again, and how these black candles are forming. Confirmation of the move 6, 2, or 11 today is a good indication of a move 3 Monday. So split puts, not just into tomorrow's expiration, but also make sure that you're catching that big move on a Monday, which we're calculating to happen, guys. With that said, W puts, SPLK puts, Tesla puts, let's roll.